Good evening, everyone, and welcome in. Before we get into today's update and I play the intro, I want to go over a quick synopsis of what to expect, as this is going to be a jam-packed, very informative update, and I implore you to stick around and stay tuned so that you can learn what's going to happen in today's technical analysis and learn a little bit of something about a bearish cross and some of the dangers in just relying on the bearish cross as an indicator to just short the market right then and there, and how it can lead people into traps. So what I'm referring to is we're attempting or approaching, I should say, a bearish cross in the monthly time frame. And I'm going to explain to you what a bearish cross is and also some warnings by what can go wrong with just relying solely on a lagging indicator, and also what the current technical analysis looks like. The DXY is back online, so we're going to have to take a look at that as well. So I'm going to make this a jam-packed update, and it's an honor and a privilege to do this in front of each and every one of you. Make sure to hit that like button, as it can really help push me through the analytics very, very quickly. Ladies and gentlemen, the sunny days are here again. Oh, sunny days, oh, what a day. Oh, sunny days, oh, what a day. I wear glasses 'cause I can't see a motherfucking thing. Happy days, oh, happy days. Oh, what a day. Oh, happy days. Oh, what a day. XRP will reign supreme. Let's just not get caught in the FUD. Oh, we're gonna crash, and we have, and we will, and we could, and it could go farther, and you have to watch for a bearish cross. Oh, yeah. Don't listen to all the FUD. Stay true. Stay blessed. Good evening, 7:28 p.m. Eastern Standard Time on the, not the East Coast. I wish it would sound better if I could say the East Coast, but in the Midwest, I suppose you could say. But it's 7:28 p.m. Eastern Standard Time on this Sunday, February 12th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. And I welcome everybody for tuning in. My son's a little under the weather, so I've been away, some of the day today. But I wanted to do an update now that he's kind of, in a peaceful spot right now. So I thank everybody for tuning in. I'd appreciate if you hit that like button, as it can really help push me through the analytics. Before we get into the bearish cross and I start explaining to you not only the benefit of being able to analyze that part of the market, but also some of the disadvantages of just relying on the bearish cross as an indicator to short the market. So I'm going to show you what I'm talking about in the monthly time frame, and I'm also going to show you immediately what we need to watch, because we're coming across a very important level that if we break, 368 would be on deck, as that's a very strong support level. So that's what we have to watch out for right now. So the DXY is at 103.660, and it continues to push up. It started off pretty decent here. We've already had a complete cross here of the bullish cross here, and a divergence, you could say, with the 20-day coming all the way through the 200-day now. So that's a bullish divergence here. So I expect, using the EMA lines, obviously that's something to be watching. That looks like it could be kind of in a bull flag here, W reversal, and that looks pretty bullish here. So now we're going to see if we can break the uptrending support at 104.21. And all we have to really do is hold 103.39, and we're looking really good here. And if we break out of here, our next major area, don't be fooled, it's not all the way up at 106.20. We have 104.86 approximately would be a major level to break through. So that's what we're watching for. But as of right now, the DXY started off pretty good. It didn't start off in a retracement, which, some might have feared that. Gold and silver still under some pressure. Commodities, it's a great time to buy your silver. It's almost up to 85 to 1. So pay attention to that as well. I'll be doing a commodities update tomorrow for silver stacking episode number 6. So I appreciate everybody who tunes in for that. The total crypto market cap is underneath that very critical Downtrending resistance, that's a multi-year trend line. That's at 989 billion, 990 billion. Like I said earlier, we're going to try to come up here, and we had to break it. But unfortunately, or fortunately, depending on how you look at it, we've been rejected by the 20-day here in the 4-hour time frame, not even allowing us to come all the way up to the 990 billion. If this continues down, you can see the topping reversal. Next level would be if we lose the 20 or the 200-day at about 965 billion. Next immediate level would be 940, followed by about 892. So we got to really pay attention to that. Now, XRP, and I will end with Bitcoin at the end of this update. So if you want to see Bitcoin, I'll do that at the end. XRP, the main thing we talked about at the opening, first off, in the immediate short term, even in the 4-hour time frame, you can see how in peril this is. So we'll go to the 30-minute, and this is dire straits here. XRP is in a bear flag, huge one, and now we're looking at this downtrending support line to see if it holds. That's the 368 level. If we break the now it's the 373 because that's where we've put in this little double bottom. You break the 373 area. Fuck, it's a little bit lower on this side. 3725. If you break that, 3724. So just say 372. If you break 372, you immediately should have a drop down to that 368, 369 range. I think 368 in this area right here, but it's very close to say exactly where. And we got rejected up here around the 200-day. And if we lose this 368, then you start to have some fun here. That's when we can really open the floodgates up here a little bit. And yes, there's the 371 and the 355 underneath and things like that. But the 371's about to fall. If this scenario plays out, the 371 would fall, as would the 368, and that would leave the 362 and 355 on deck before the real uptrend in this area at about the 343. So, I mean, we got some big problems here if we were to break down in the immediate short term. We're not even talking about it. See how we failed breaking back into there, and now we created a bear flag out of it? So, in this pattern, I just show more of the immediate short term as well. So, what's happening here is if you take this out into the monthly now, is we are very close to having a bearish cross here. And it's very close right now in the monthly. If we have a bearish cross here, that's very, very, very dangerous here. And that's the ultimate if you get it in the monthly. So we're going to see if that bearish cross forms. And now some of you might say, well, what the hell is a bearish cross? I'm glad you asked. A bearish cross between two exponential moving averages, EMAs, is a bearish signal in technical analysis that can indicate a potential trend reversal. This occurs when a short-term EMA, such as the 50-day EMA, which is what we referenced just now, the exponential moving average, crosses below a long-term EMA, such as the 200-day EMA, indicating that the trend has shifted from bullish to bearish. So if we look at that, this would be the 20-day in red coming down, and this is the 50 in orange, you can say. Once that crosses, that's considered a bearish cross. And right now, seeing that we're on a bear flag, if we have a bearish cross here in the monthly, and it's a giant bear flag, I believe for XRP, we have to get back into the true accumulation zone in here before we can ever have a real rally, which means to me we have to come down to at least that 18-cent mark. And it's painful. I get it. And let's go into the, we can see more pattern. It's painful. I get it, folks. I get it. But in this scenario, this uptrending support breaks. If we have this cross, we have to face the facts. If this cross happens and it's confirmed, 34.3 isn't going to hold 34.4. We're going to come down to the 2017 trend line, down to 18.7. This is the 2021 uptrend, roughly, or 2020. This, I believe, is the 2017. Yep, and then the 2013 is below that. So the 2020 uptrend is what we would break at 344. You break that, then your next uptrend, if you're doing the true uptrends, is the 2017 uptrend, and that gets you down to about the 18.5, 19 cents, depending where you're at. So 18.6, we'll say. But that's what we're really looking at. So if you have that bearish cross, that's what we're looking at. Now, that's a great way to show the technical analysis. And like I said, we'll end with Bitcoin. So just, if you want to stick around, stick around. But I'm going to show you some dangers in just relying on the EMA lines, as if you look in the shorter time frames, you can see you've always got crosses and then they invalidate themselves just to recross. And we had it several times here where I can actually show you. We had a bearish cross here. As you see, the red line crosses. So that's a bearish cross. Almost had a bearish divergence, but then it pulled back up and it went right side up until we finally topped here again, trapped all the shorts, got them out on stop losses, and now it just continues down. What everybody's seen here, it faked everybody out and actually happened down here. That oftentimes happens, and it's called a topping reversal in the area. and then it breaks down. But this is very interesting, so you have to pay attention to what I'm saying here. So getting into that, I'm going to show you 5 ways that a bearish cross, or using that as an indicator and just blindly using it, not paying attention to understanding the technicals or the pattern formation, can get you in a lot of trouble. And here's 5 ways that can happen. Just so you don't get caught with your pants down here, as this is a teaching YouTube. I don't hide behind paywalls. I give you all the information I have. And if that's not good enough, I put my heart and soul out here, so it is good enough. For me, it's good enough, so for you, it should be too, and I appreciate each and every one of you. So 1, false signals. A bearish cross can sometimes produce false signals, as the moving averages can be impacted by short-term volatility in the stock's price or crypto. But I just showed you a bearish signal, or a fake signal, or a false signal, with the 20 crossing the 50, then coming back up, resetting itself up, and then ultimately having the divergence and breaking straight through the 200. So a delayed signal. A bearish cross may occur after the trend has already reversed, making it a delayed signal that may cause investors to miss the opportunity to take advantage of the reversal. I believe that's what all these indicators are typically for, is the trap that, the technical trader who doesn't understand the patterns, formations, or the terminology, but they understand the indicators, which gives you an advantage because you know which side's up and down, but it can also lead you to a slippery slope, because you're going to have a bunch of people marching to the same drum, and it's an easy way for the market manipulators to gain some capital and liquidity in quick moments of crisis. 3, multiple crosses. In some cases, a stock's moving averages may cross multiple times, producing conflicting signals. 4, lack of confirmation. And this is something that people often do. They don't wait for the confirmation after a cross. You want to see a hit on the bottom side of that 20-day after it makes a cross, of the 50 especially. You want to see the 20 is still becoming ultimate resistance. And then you also want to see us break through the 200-day for the price action and use that as resistance to give you a confirmation that this bearish cross is confirmed. A bearish cross should be used in conjunction with other technical and fundamental analysis tools, as it does not provide a guarantee of future price movements and may not always be confirmed by other indicators. And 5, this is the most important thing, market conditions. The effectiveness of a bearish cross as a bearish signal can vary depending on the overall market conditions, such as the presence of a bear market or bull market. In a bear market, a bearish cross may have a stronger impact, while in a bull market, it may be a weaker signal. And make no mistake about it, folks, we are not in a bull market. We're in a bear market still. We've not had a 50% recovery yet to come back out of that bear market. We were down some 80% in most of the market. I mean, it's great that we went up 5 or 10 or 20% in some things, but gave a lot of it back. Some things have gone up high. H-bar's had a great run. But now you're going to see what happens with the truer market. Is H-bar now going to have a sudden drop? But we're not talking about H-bar today, and I'm going to end on Bitcoin. If you want to see H-bar, go to my first update of the day. And now we end with Bitcoin. And we still have this exact same pattern prediction. We have a multi-year trend line, that downtrending resistance, which is that blue line. And in the next update, just so I don't give you too much terminology, I'm going to be talking about the downtrending resistance lines and the uptrending support and exactly what they mean. But right now, we're being rejected by 21,965, which is perfect because it's right at the 200-day now. And if we get rejected by this, it's been my belief that this was going to form a Bart Simpson top and at least retest this downtrending support around 21,062, but ultimately 20,965. And then we might be able to bounce up. But if it keeps pulling over here and pulls down, you might come down a little bit lower. But I'm looking for a retest around 20,965. Even if this pattern were to maintain bullishness, that's what it looks like to me Bitcoin has to do. If you want this to maintain being bullish right now and push out, got to get back over 21,965 and ultimately hold it. I'm XRP Future Millionaire. If you want to trade like me, go in the video description below or go to the pinned comment in the video description or the comments below. And you can find MEXC and or BitGet. In MEXC, you don't need to use a VPN, no spot fees for buying or selling, and no KYC. In BitGet, you will need a VPN. They both have futures trading up to 200x, and they both have XRP. So if you ask where to buy XRP in the USA, I would start with MEXC. If you're already on BitGet, I would use BitGet, or if you want to use a VPN, I don't particularly like a VPN, so I don't use one. I'm already on BitGet. I was already signed up, so it has no restriction for me. And then MEXC I also use. It has HBAR and a lot of other ISO coins as well, as so does BitGet. And then Uphold is where I keep my most capital because I trust it. They've got their new tax laws where they're cooperating with the USA for the new tax season, and they're Web3 enabled. So take that for what it's worth. Hashtag the FUD stops here.